Okay, we have talked about the budgeting yesterday, right? So today we're going to talk about the cost analysis for budgeting purposes. So now we know how to prepare principle of budget, components of the budget. So now in the budget, and yesterday we mentioned about how to prepare budget. First, we have to forecast our revenue, right? Then we estimate our costs. Okay. So today we're going to talk about our costs. What are the costs? Kind of costs we need to know. There are so many types of costs, and how these costs are related to the budget. Which one of these costs are related to the budget? Okay. So we're going to cover all these subtopic here. Concept of the cost terms using. There are so many costs. Some costs like directly related to the our products or service. Some costs are what we call it indirect related. Some costs is variable. Others are fixed. Then you have what you call it manufacturing costs and non-manufacturing costs, period costs and product costs. There are so many terms are using here. So we need to understand all these kind of costs and how these costs are related to our budget. Okay, so we start with here is about what are the costs here. So it's very important to understand the terms of the costs used. So these costs are some are relevant for forecasting and some are related to the decision making. Some of these costs are related to our planning. Some of these costs related to our controlling. So which costs we can control, which costs we cannot control. So all these kind of costs we need to know them, okay? Because if we don't know these costs, it can go with a misclassification. So we need to have to classify costs first. Otherwise, it will have what we call it in our budget inefficiencies in locating our resource in the budget. Yeah. So knowing your cost is very, very important things when it's come to the budget. So because accurate classification help us to allocate our resources in the right way. Otherwise, you have what you call misallocation in your budget. Okay, so these costs here, why does it matter? Okay, why costing is matter? Okay, for example, let's say talk about your working there as controller, for the budget, controlling the budget. So you need to know which costs I can control, which costs is you cannot control everything. Okay, so control everything means you have to do everything from scratch. So what I want to know, what are the costs I can control, what cost is out of my control. Okay, so this one is here, the classification of the costs or knowing the cost for the budgetary purposes. Because each cost impacts a budget or parts of the budget in different way. Okay, not all costs have same impact on the budget. Okay, different costs have different impact in our budget, and any misuse can lead to the poor planning. Okay, our planning will be very poor, and reporting and your investment decision at the end also will not be accurate. Okay, as a conclusion, you won't be able, even your planning, your budget is very okay. Okay, you involve all parties, you did everything, but miss a classification of your cost, can your budget will not be a tool that helps you to achieve your strategic goals. Okay, everything is done, we did everything fine, but at the end we see our goals are not being achieved. Even we did everything because you have classify your costs. Okay, so we have to align these costs, okay, with its purpose to improve the budget accuracy. Okay, the budget, to tell that this budget is more accurate than others, it's about how to align these costs with your budget. Okay, because like for example, one of these costs, like for example, now we want to, in our budget we have a lot of activities, right? As we said before, there's a lot of initiatives have to be taken. So for this, every one of these initiatives, there's a cost. Okay. So now these costs, need fund. Okay, sorry, these initiatives need fund, which is a cost. Some of these costs are direct, some is fixed, you cannot do anything about it. Some you can play with it, you can manage it, you can control it. Okay, like for example, your fixed costs, no matter what you did, okay, it's there. Okay, but if you don't know that this is a fixed cost, you will still try to do something about that fixed cost, which is, this fixed cost cannot, when it comes to the controlling, it's nothing to do about it. We only can control, for example, the variable cost, right? Fixed costs, you can do something about it when you plan, okay, at the beginning, in the planning. So knowing these costs is very important for you, how to deal with these costs and in what stage of our budget. Okay, so these are the very important things. Like for example, let's talk about your company, like for example, okay, which costs you think, or do you have these all kind of classification of the costs? Do you classify these costs?
Mostly it's not on cost basis, and we don't have like fixed. Well, we classify it based on the category, which is like OPEX, but the fixed one would be like manpower, like the manpower cost. Employees, salaries,
rental, utilities, right?
Yeah.
Sometimes it's same.
Utilities, something like that. But we don't specify like this is fixed cost, this is variable cost. It's just like we know which one is those yang fixed lah.
Okay.
Yeah.
The service you provide, for example, right? You provide a service, right?
Yeah.
You don't provide products, service, right?
Service, but then we don't really like charge. Like it's like more towards like a corporate level in a way. Like if for example the recent one this year we held a conference. So that is one of the things that we charge to the participants who's attending the conference. So that is one, but that is like ad hoc events, like that we hold lah. But other than that, like we don't really charge people. Like this, we charge people based on like for the operators on the exploration fees, maybe on the downstream license to operate, that kind of fees lah. The one that we charge. Like
your price also, you have a price for your service.
Yeah.
You're pricing yourself
based on your agreement lah. Not service as in like, don't call it our service because we are the regulator. We don't really like profit making.
So what I try to say here is that there is no what you call cost allocation methods used.
Yeah, nada, no. Yeah.
You just lump sum the price. This is the price. Then you based on this price you spend and calculate all your costs. So this price will be fixed, right? Is it?
Like our funding would be like macam from the government. I don't know. I'm not sure. So that's why we get the approval. So not really but I think like for the cost allocation it will be helpful for
internal use lah. For efficiency
reporting, efficiency
inside internal use for that.
For reporting.
Yeah, because as you see when it's come to the cost allocation is very important part. Because as I will show you later, there is a companies. Okay, there's a companies. They are doing very well. Okay, but they fail, in the market. They have a customer, have everything, but the way they allocate the costs, they are using wrong way. So once you use wrong cost allocation methods, what that means? That means you are going to have, either overestimate or underestimate your costs. Overestimating costs or underestimating costs. So what?
Yeah.
So what next? What's the problem? Okay.
Yeah.
I overestimate my costs or underestimate my costs. Your pricing would be wrong also. So what people are making, this much is my cost. So then they mark up and then they put the price. Okay, this is how it works. So now once you over or under estimate your costs, okay, let's say that something is cost you, for example, 50 ringgit cost. Okay, this is the real cost. But allocation cost, once you allocate your cost, now either you over or under. So if you overestimate, your cost will be higher than 50, right? Overestimation.
Yeah.
Your actual cost is 50, but you over, it'll be 50 plus. When you under, your cost will be less than 50. Okay. Let's say that, okay, I overestimate my cost is 50, 55, so I will sell in 60. Okay. Your competitor in the market, okay, they calculate the cost and their cost is 50 and they sell at 55. You are selling at 60, right? You get the point?
Yeah.
So can you compete with them? Somebody sell at 55, you sell. Because 55 for you is the cost.
Yeah.
But for them, the cost is 50 because they use the right way to allocate the cost.
Yeah.
So that they can make profit 5 and you cannot compete with them.
Yeah.
Okay. Once you underestimate, okay, said, okay, let's say that I underestimate means my cost, I calculate my cost is 45. So I make 5 profit, so I sell at 50. Okay, I sell at 50.
Yeah.
For them, its cost is 50. Then I sell at 55. You get what I mean? See here? Now, once you sell at 50, everybody will buy from you.
Yeah.
Right?
Yeah.
But you sell at 50, you sell at the cost.
Yeah.
Are you going to make any profit? Are you going to survive for a long time in the market? No. Soon you will collapse. So in both ways, actually, you will collapse. In the first, you overestimate, nobody will buy from you because higher price. When you underestimate, also everybody will buy from you, but for how long you can sell with lower than cost? You cannot sell forever. Okay, so you're going to collapse again. So in both ways, once you over or under means once you use wrong cost allocation methods, you are out of the market. And there are so many cases, there's so many cases we have, the over or under, which is going to be, if we have time today, I'm going to deal with that over and under, but I'm not sure about, we have 3 more days. Okay. So today, tomorrow, and after tomorrow.
Yeah.
But if you want, if you have planned to take the last day, I will try, because today is the last day to determine, do you want it this way or that way? It's up to you. I'm just following. So if you want to have it for that long, so we can continue for all them. So
but we have that, like if I want, would you be okay to is it not too cramped?
It's up to you. It's okay. Let's go for 5 days.
Okay.
Since you are okay.
Yeah, I'm okay.
So we go for 5 days.
Yeah, just
no
go for 5
days. Okay. So this one here, as we said, this one the over under will be tomorrow with cost allocation. But today we're going to talk only about the costs. What are the type of costs? Okay. So here we have, as we said, there are too many type of costs, different costs for different purposes. Okay. For example, here we have costs depending on the context we are using. Sometimes costs for decision making to decide. Okay. For example, focus on relevant and avoidable costs. Some costs you cannot avoid because it's relevant. Some costs we can avoid. Okay. for control, cost control, you want to control your cost. So control cost actually is you are measuring your performance with the actual or with your budget. So actual with the budget. For inventory valuation, so these are costs, affects the financial statement budget. Okay, planning used to budget and forecast. For example, here projected fixed and variable costs. Okay, this is for planning. For every different occasion, we are using cost in different way. Sometimes you need cost for decision making. Sometimes you use it for control. So which cost I can control? To evaluate, for example, my inventory. If you have inventory, okay. So what are the costs are related to your inventory? Okay, which is talking about manufacturing costs. Planning costs, we are talking about fixed and variable. Okay. So these are the things that make us, we need to know, we have to know, okay, the classification of the costs. Okay. So we have here, for example, decision example, okay, like to choose, okay, you want to choose your vendor, okay, you want to choose a vendor, choose between vendor A and vendor B, okay, based on the total cost impact. Okay, this is for decision, for example, making. I want to decide. Now I have two vendors. Okay, so which one do I have to choose? Is it cost vendor A or vendor B? Okay, so in this case you have to calculate the whole total cost for A, cost for B, and then this for decision making. For control, you need to compare actual versus standard material, for example, costs. Okay, for example, here we have material costs us. When you talk about material costs, before material costs is directly you can directly trace actually the cost here. When you talk about cost allocation, the issue with costs. Okay, for example, let's say that you have direct costs or indirect costs. There are two types, for example, in this come to the direct cost is why they call it direct costs. So both costs you spend, both costs you pay. But some of these costs we call it direct and indirect costs. What they mean by direct or indirect costs. Okay. Direct costs that you can tracely or directly trace to the product. For example, material costs. You have a product, right?
Yeah.
You know how much you use material for that product. Very easy.
Yeah.
Okay. Labor also is very easy because you have how many people working there, so I can trace directly. But sometimes you have costs which is indirect. Okay. What are these costs is indirect? For example, you have the rental. Okay, rental for your company. You have company, you rent office or rent factory or whatever you rent. Now this rental, can I trace it directly to the products? It's very difficult. Why? Because this building used for products, used also for management. Okay, there's a management there, admin there. So now this cost, for example, 10,000 I pay for rental. How much is related to the products? How much is related to the management? Because not all costs is, you can charge to your product. Okay, because here when you talk about, I want to calculate the cost of sales, cost of my inventory. Okay, to evaluate your inventory cost, the admin people have nothing to do with your inventory, right? Because you have another class, you call it period cost, product and period, another classification. But this one now, but at the end, I have to charge it to my product. Okay, so it's going to be traced, but indirectly. Okay, so I have to allocate it first to the whole departments. I have marketing department, sales department, admin, then I have production. Okay, there are so many departments here. So I cannot allocate everything to the production, because if I do so, means the other things have zero cost. So you have to trace it to the whole, Then later on, for example, you have marketing. You allocate the marketing to how many units you sell. Okay. Because maybe from product you have so many products A, B, and C. Maybe product C doesn't use marketing, so why charge it to the product C? You know what I mean?
Yeah.
And you have, for example, in your factory, even in your factory, in the factory there are so many people are working directly in the machine with the labor. We have one, they call it what they call it, assembly or and supervisors. Supervisor supervise all products. Okay, now the cost for this supervisor to which one of the three products I have to charge? Do I have to charge it equally? For example, his salary 3,000. I have B, C, A, B, C. Do I have to allocate 1,000 for each, or how? You know. So the setup, machine setup. So also again, how are you going to do it? So here we have a lot of problems when it comes to indirect costs. Okay, but direct costs, from the name, you can trace. I know product A how much material I use, product B how much material, C how much. Very easy, straight away. But the problem is for indirect costs, and that what the cost allocation here is meant to how to allocate indirect costs. Okay. Direct costs you don't have to allocate, trace directly. But a problem here we have what we call it indirect costs, and there are two ways to do this: the traditional one and modern one. Okay. And the problem is the costs, to evaluate your costs, because it depends on what the allocation method you use to do it. Okay, so these are the things that we need really to consider when it's come to our, the cost. Like for example, using absorption costs for budgeting for our cost of goods sold, because in some companies, like for example, all companies who are dealing with the materials, okay, they're having inventory stocks, they need to evaluate how much material they have. Okay, the cost, because at the end I want to estimate the cost, right, or expenses. So to estimate the expenses, you have to include all costs. Okay, if you ignore any of these costs, you will run out of what you call it budget, because there's no budget for that item or that cost. Means we have to include all costs in our budget. So ignoring any of these costs, we will run out of budget, because that cost is not taken into account in our budget. Okay. So one of these our things in our budget, we have to evaluate, for example, the material we are using. If you're talking about the construction companies, okay, construction companies, they're using all those material, like for example, cement, right? Iron, all of this kind of material. So they all cost need to, and before that, okay, before we come to the inventory cost, we need to take a decision which one of the vendors we have to use. Okay, again we need to know the cost. Okay, vendor A and B. How to choose between A and B? I have to look to what the price they're going to charge. Not only that, you see, once you buy something from your vendor, sometimes the delivery have costs, right? Sometimes the delay also have costs. So all these things you really need to know to come out with very accurate, budgeting. So ignoring any of these kind of costs would cause us to have insufficiency or inefficiency to allocate the resource in our budget. Misallocation for the resources in our budget. Okay, so now we go to, for example, here we have, like, for example, here, this example for decision making. Actually, I think I deal with this one later on here. No, it's all here, right? No, it's all here. Okay, let's have it here. Okay, you look at this one here. Different costs for different purposes. Okay, choose a supplier using the relevant costs. your company produces office chairs, okay? You need, for example, 5,000 units of the special component of the chairs for your new share model, okay? And you have this information about these two suppliers. A, unit price is 9, delivery costs 1.5, and required, inspection, yes, which is 2,000, and lead time. Lead time means the time between your order and delivery. Okay, so it's case 7 days. B have cost per unit is 10.5. Delivery cost is included. Inspection no need. And lead time only 2 days. So if you order today, you get it 2 days after 2 days. Okay, now we have this additional information. For example, your team has capacity to inspect only one patch, which is per week. Means every 7 days they inspect only one time. You are behind schedule, and any delay will cost you about 5,000 in as a penalty. Okay, from your trailer. Only costs that differ between options are considered relevant. Okay, now we require to what are the relevant costs for the decision making. Okay, you have how many costs? We have 3 costs here. We have the price, delivery costs, and inspection costs. These are the 3. Now I want to decide which one of these 3 costs is relevant to your decision. Okay, which one you will is relevant. You take into account to decide. Okay. Second one, which supplier would you choose based on the relevant costs? Okay. Last one, will your decision change if the delivery speed was not an issue? Like for example, lead time 7 days, 2 days. Is it have anything to do with your decision or not? Okay, now let's talk about the first one. What are the costs is relevant to your decision?
Will be the unit price and the delivery cost.
Unit price and delivery cost is relevant.
Yeah.
Okay.
For the decision.
Means okay, if we talk about these two, okay, the supplier A costs 9. Okay, we need how many units? 5,000, right?
Yes.
5,000 units required
5,000.
times 9 would be 45 plus 1.5.
Yeah.
So it will be
6,000.
Okay, let's say A and B. Okay, in A you say what the price, huh? Price, which is 9 here times 5, huh? 45,000.
45,000.
Delivery
Is 1,500.
1.5. So at the end you have 60.
4,600.
500. Okay. B is 10
1050.
times 5 would be 50. Is it 52,000?
1050 times 5,000.
52
52,500.
is 0, right? Not
Yeah.
delivery. So it will be 2.5. Now which one you want? A or B? Which one your supplier will choose? Say choose supplier A.
Based on that cost would be A.
You will choose this one.
Yeah, based on that cost would be A.
Yeah, these are relevant costs
Yeah.
too. So they have the answer is this one is less, cheaper.
Yes.
By how much? By too much. By 6,000, yeah. Okay, 6,000 is less.
Yes.
Maybe. Okay, now. Okay, they said here.
Yeah. Which is
These are the 2 relevant costs. Would your decision change if delivery speed was not an issue? Not delivery cost, delivery speed. Delivery speed means we are talking about this lead time. Because you said that Delivery cost here is how much? 1.5. Okay. So that's have nothing to do with the cost is there. Okay. Now delivery speed.
Yeah.
So is there any issue? You will change your mind?
Yeah. If there is not an issue on the delivery speed, I will not. I will
You
change
see,
my mind.
this one is 2 days.
Yeah.
This one is
7
days. Okay. Would the decision change if the delivery speed was not issue? You didn't have problem with the
Delivery
inventory.
speed, no. I will not change.
So this one is low cost if the delivery speed is not an issue. So 7 days no problem.
Yeah.
Right. So you will go for this one.
Yeah.
This one is good if the matter of delivery speed is important.
Yeah.
So this one is not the right issue for now.
Yeah.
Okay.
Yep.
What about inspection costs? Is it not important?
This is like quality check.
Huh?
Is that quality?
Because you see, you are behind schedule and any delay will cost you 5,000. Okay. So here's the two issues here. The delivery, if it's happened, loss happen will be 5,000 plus.
Yes.
Here.
Yes.
If not, okay. Now actually you know one of very important costs, which is inspection costs.
Yeah.
Right?
Yeah. Because if it's out of that 5,000 units, if it's like not, like it's not.
Okay, see here. Supplier A,
Uh-uh.
the cost we did it okay. Delivery cost 1.5. Inspection cost 2,000, which is 4.8. We did here we missed minus 2,000. Okay. Risk here may delay, which is penalty would be how much?
5,000.
5,000. So if these things happen, okay, 48 plus 5 would be 53, right? But this one I did it correctly here. 5 delivery 0, delay no penalty because 2 days only. Okay, so any delay will cost you 5,000.
Yeah.
So here, what to say here, this cost actually, the real cost here is, we have inspection 2,000, right? Penalty 5. So altogether will be 53,500. Okay, this is the real cost for A. This one for B. So the option here is, but the question said here, if you go there, if this inspection is not there,
Yeah.
okay, means if the delivery is not scheduled, is not a matter, not an issue. Okay, so what's he going to do means your decision will change. Yes, will be not minus 5. This one will be only 48. 48,500, which is, this will be my, right decision.
Yeah.
This will be my supplier. Okay, so see, to decide about this supplier, which supplier you're going to use, okay, you need to know the cost, what kind of cost, which cost is relevant, which cost is not relevant, because that's like what you did just now. We find out this one is 46,500, this one 52. We will choose A.
Yeah.
Okay, but A actually costs us 1,000 higher than B. Okay, which means that for decision making, if you don't know about your costs, you will choose the right or wrong vendor or supplier. Okay, because some of these relevant costs you don't take into account. Okay. Once you don't take this in our account, actually, we are going to prepare our budget just now. Our budget that this supplier is 46,500, and we'll put this one in our budget, right? we are going to put this one our budget, but our budget is this one is missing less below the right cost, which is
Yeah.
right cost is 53,500.
Mm.
Okay, so you put something in your budget which is much less than the actual one. Okay, so we need to say here that knowing your costs is will give you will take the right decision, and based on that right decision, your allocations for the resources in your budget for your expenses will be accurate.
Yeah.
Okay. So then if these things happen 46, then the actual is in our budget, our actual will be 53. This is the actual one, right?
Yeah.
So there is a gap between these two is 5,000. Where is this 5,000 go? Okay.
Yeah.
And you would be questioned for wrong estimation. How come you don't know? 5,000 gap. 5,000 is more for this figure. 5,000 is more than 10%. So your estimation is wrong 10%, less than the actual estimation.
Yeah.
So which is considered like for the things that you should not get it wrong.
Yeah.
Okay, it's for the thing that you should not get it wrong in the right place. Okay, and this one can cause to a lot of problems. You know, this wrong estimation or wrong decision, okay, due to awareness of your costs, okay, can cost you a lot of trouble for the budget itself, can be one of the management issue, okay, and then will create a lot of problem, the conflict between your company and supplier. So your company will say, how come you charge us more than the market, you know, and you will go and look what they will do. They will look for another vendor, right? Why? Because your cost, you know, is higher than the other vendors. So a lot of things, you know, can be not only that. If this cost here, you accept this, you estimate this one is here, okay, 46, where the real cost is 52. Actually, you are missing here is a very good vendor that charge you. You see, that is very good when it's come to the delay lead time. Okay,
Yeah.
you are not only making wrong decision because you underestimate by 5,000.
Yeah.
You are here, and this vendor is very good because his products don't need any inspection. Okay, and delay only 2 days. What that means, delay 2 days? You see, delay 2 days means I have to order only 2 days before my inventory becomes zero. Okay, that one is very important for me. You know, you save the cost for inventory for 5 days. You know, inventory costs. See, actually the cost for this one here, you make saving in terms of, don't talk about, you know, the penalty.
Yeah.
Okay, don't talk about the penalty. He don't charge you a penalty, okay, because delivery will be immediately. Inspection also not there, but here, 2 days I have, you know, instead of making, you see here, delivery 2 days, you know, if delivery 2 days here for 1 month, 7 days, means you have to order here how many times? 4.
Yeah.
But this one is only, lead time is 2 days. 2 days.
Yeah.
You can order 15 times.
Yes.
Okay, means you are going to save the cost between these two. You're going to save the cost. You know, every month is a 5 days.
Yeah.
Cost means 20% of your inventory cost you can cut down. Okay, compared to this one.
Yeah.
So, and you don't have to have bigger. This one you order only 4 times, right?
Yeah.
Means your space of your store have to be bigger.
Yeah.
This one I will order only for 2 days. Means I need small place to store my things.
Yeah.
So here is the, you know, you not only get a wrong decision,
Yeah.
your
Efficiency.
efficiency, you know, you can cut down
Yeah.
your inventory costs, you know, by 20%. So another saving there. See how is important is the these costs. No, awareness about these costs. If you are not aware about these costs,
And the delivery costs, like the delivery cost would cost 4 times in supplier area.
and that one he costs you zero.
Yeah.
You can deliver every
15
day,
times.
but there is not. If there is delivery cost, yes.
Yeah.
I save from inventory cost, but delivery cost too high. But
Yeah.
here there is no delivery cost.
Yeah.
You are saving, in terms of, see, here's less by 1,000, okay? Plus, actually, this one actually is not, if you deduct the delivery inventory cost, this cost will be much less. Okay, if you go to your inventory,
Yeah.
maybe you pay 20,000 for the one, you will choose small store, which is more than 20% less.
Yeah.
Okay, so you're going to have another. It's not only the story. Instead of having 3 or 4 people in the store, small store you have only one.
Yeah.
So you reduce the number of employees. The system you are using for your inventory, the documents, the system you are using. Security, sometimes you pay for security. If you have big store,
Yeah.
you need to have 2 guys, so 24 hours,
Yeah.
to that one. If it's small, it's no need. Okay. Even you can, if it's small, you can what they call use outsourcing. You store with somebody else and you do all these things because it's very small. You need small space. Okay, so a lot of things here when you know about your costs. Okay, a lot of this is what we say. Now you can play the role as a controller. Okay, the controller here actually he look for the current practice for the company. Okay, like in this case, the vendor you are using, this one charge you delivery, that one is not. Okay, these things you need to auto record. Okay, this one, what will happen if, what if you are using different one? So what is there, how much cost we're going to save? Okay. These are the rules, or these are the rooms that the cost controller or budget controller can play in these things. Okay. You get suggestion to the top management about these things is happening. Okay. Sometimes the cost is very low enough. You cannot, okay, let's for example, I want to reduce, we have reduction, you have the deduction and our variable cost. Variable cost, there is no much to deduct there. Okay, fixed cost also, there is no much also can reduce in your cost. But for example, in like the vendor, these are the costs that really matter, and these are the costs that you can reduce. And that's why, if you remember in the first day, we talk about, for example, one of the techniques are using for efficiency by using just in time, order in the right time, so you can reduce the cost for inventory. This one actually is almost same to the just in time. You need time only 2 days, so you just get it. Okay, why they do that? Why companies are doing this? I want to know when to order. They call it period to order. At what time I can order? So because you have in your stocks inventory, now why I want to know what is the right day to order. Okay, when at what levels of stock I have to make order. So they do it, or they do calculation by looking to the lead time. So how many days I will have to wait between the order and delivery. Okay, this is what they call it, lead time. And also I know how many units I'm going to use every day. Okay, you are going to use every day 1,000 units. Okay, and lead time is, for example, 7 days. Okay, now if once my stock is reached 7,000, I have to make order. Why? Because the stock I have 7,000, every day I take 1,000. So first day 1,000, you have to balance 6. 500 or 5,000, 3,000 to 0. Once becomes 0, you will receive the delivery. Okay, your stock will be there. So why we do that? Because we don't want to run out of stock. Okay, so we have a special management for inventory. There's a complete management for your inventory. When to order, how to order, safety stock. Also, they have to add. Okay, safety stock means maybe delay one more day. Instead of order in 7,000, I will order in 8,000. Because if they fail to deliver in the 7th day, I still have one more day to. Yes. So that's what they are using. They call it, the security stocks. So these are the things. That's why they do that, because they don't want to have high inventory costs. Okay. But if your company don't have such system, if the company don't have this inventory, management, you are involved in a huge stocks cost for your inventory, and you don't know about that. Okay, you pay a lot for your inventory, and you don't know about that. Okay, and this is make a lot of difference in your budget. Okay, your budget can be high or low based on these costs. Okay, so this is how to trace this or to decide which one is relevant and which one is not. Okay, now we go to this, what we call it, here we have what they call it, the definition. What is the cost actually? Cost as expenditures, okay, required to produce or sell products or get assets ready for normal use. Okay, this is the cost. So anything you spend to acquire, okay, products or to acquire assets or make it ready to use. Okay. There's a difference between cost and expense. Is there a difference between these two? What are the costs? What's the expense? Is it same? Cost versus expense. Okay. Cost refer to the amount spent to make products. Okay. Acquire assets. Okay. Expense refer to the amount spent for ongoing operation of the business to ensure revenue generation. For example, your salary, my salary in the company, is it to produce? No, it's expense. It's not a cost. Okay. That's why if you look at any income statements. In income statements, first you start with the revenue, right? Then minus cost of goods sold. That figure is only include the costs. Then we have what they call it other expenses, right? We don't put other costs. We put other expenses like admin, marketing, all these things, we call it expenses. Okay. When we talk about these costs, so we are talking about the cost only related to our production, to produce products or to acquire assets. Here's the cost we have. First one is a direct versus indirect cost. So what are the direct and indirect costs? Okay, so knowing these costs, different costs, okay, for the budget help business to make informed decision, allocate resources, and the price strategy. Okay, evaluating the profitability also, and monitor and control the cost, all of which contribute to the better financial management and planning. Okay, your financial planning and budgeting, okay, it can be good or bad, right or wrong, efficient or inefficient, based on how you deal with these costs. Okay, your decision, like what we said now, our informed decision, so to know which one is relevant, which one is not, how to allocate the resources, like what we have here. We allocate the resources wrongly. Okay, we give underestimation because we don't identify the right cost, which is the relevant cost. Okay. Also to do a pricing, like what I said, Somebody overestimates, somebody underestimates. The price will be based on this cost. Okay. Evaluation of profitability or profit to make profit or loss. You overestimate, underestimate, so your cost will be more or less. To monitor also or control the cost. So which cost to control? Okay, what are the costs we can control? All of these things is important to know which one is direct, which one is indirect cost. Okay, and for this, what is the direct? As you said, cost that can be directly attributed to a specific product or service. Okay, for example, direct material. Okay, direct labor. Why this is important? Because it's essential for products costing and pricing. Like as I told you, any wrong with our costing straight away affect our price. Okay. Indirect cost, that cost that cannot be directly attributed or traced to our product or specific products. For example, factory overhead, admin expense. Okay, so allocate to the products for the costing purposes. Okay, so and here is where is the cost allocation method is used. Okay, cost allocation methods actually we are using it to allocate this one on it because this cost can be directly attributed. Okay, I know for these products how many workers they have, and I know how much material is used. So then how many units I produce? I produce 1,000 units. The cost material costs 2,000. So 2,000 divided by 1,000. So every unit you get 2. Labor is also 2,000 per month. Divide by, so everyone will get 2. So 2 labor costs and 2 material costs. This is direct cost. Then we have indirect costs. So now, is it the only cost we have 4? No. Okay. You have, for example, here, A, B, C. Okay, I have material costs, for example, okay. I have material costs, no, units. Here we have 100 units. Okay, here we have 150. Here we have 200 units. Okay. The cost we have here, the total material costs, I have here, for example, 10,000. Labor costs, I have also 10,000. Okay. Now I can trace this one directly. So how many units we have here altogether? 450, right? So I have 10,000. This one can be 10,000 divided by 450 units, right? So what you will get? Or to make it easy, okay, make it easy to calculate, let's say this one 250. 250, yeah? So it's easy to divide by 500. So we get the price here is 20, right? Okay, the same things here. Okay, this one can be also 10,000 over 500 units. So this one will also be 20 per unit, huh? Per unit. Okay. Now I know that's my labor costs and material costs for every one of these units will be 20. Okay. And any units produced, so will be 20 here. This one 20, 20. So now I have total cost here is how much? 40 per unit, which is labor and material. This is the cost per unit everywhere. Okay. Now you have this what we call indirect. Okay, these two are direct costs. So indirect costs, there are so many. Like for example, he said overhead or admin expense. So what is admin expense? I have for management, okay, salary, I have for rental, utilities, all these costs now I have to allocate to all these units. Does these units consume the same amount of this direct cost or not? Is it same? Okay, maybe this product A, you know, I'm not using any, for example, I'm not using marketing. I don't do any marketing, and this one I already have customer for A. So one of these indirect cost, marketing cost. Do I have to charge any marketing cost to A? Should not, right?
Yeah.
Because this one cost is indirect.
Yeah.
So now I have to use right way to allocate this indirect to equally, and I have to in accurate way. Because if you charge these costs, for example, marketing to this one, you will over costing, right? At the same time, you will underestimate the cost for these two. Why? Because you take some of the costs that should be only for two and you charge here. You overestimate A. Overestimation A means the cost will be higher than you sell in the market is higher, right? This you underestimate, the cost is lower, then you will sell the market less. Okay, and here we have a problem. Okay, here we're going to have a problem. This one overestimate high cost, no customer will buy that. This one you underestimate, you sell in the market at a lower price, so everybody will buy. Okay, and this is only one type of cost, which is marketing. Okay, you have also in the factory, in your factory, there are so many things. We have machine setup, okay, machine setup, assembly department in the factory, they are inside working there. So these costs all are indirect for all of three of them. Okay, you have also have the supervisors in the factory. So which one is how much this one consume every one of these supervisor time? Here maybe he only spend only 1 hour per day, but here we spend 3.5 hours here and 3.5 hours here. So I have to charge more of this cost to these two than A. Okay, and if you really don't look at this costing, you will have a lot of problem with your pricing, either under, over, or underestimation for certain products. Okay, and that one will lead you to the wrong pricing, okay, of your products. And wrong pricing means you will not be survived in the market for a long period. Okay. And also for your budget, when you do your budget, you will overestimate the cost for one versus another. And then you will decide this one overestimate, you sell at the market at a higher price, you sell the market higher price, means maybe next year in your budgeting, your top management will decide, let's cancel this product, right? You will cancel it because it's in the market, it's too high price, we cannot compete with our competitors. So what the decision, this cost center this product, you cancel it. Once you cancel it, now you will continue with these two. Now the cost or what is charged for these people will go back to these two, like marketing. So this cost also in this year will go higher because it's the right cost. So it'll go higher. Hey, you'll find out, what are you doing? Last year we solved this problem, and continue the two profitable products. Okay, but now we make loss. We cannot compete in the market because you already the costs go higher. What happened? Why the price for these two products is higher? Why our cost now is higher? Your cost is higher because you wrongly charge their cost to A, but A is not there anymore. Now the real fact is paid. And then your cost next year will cancel everything. Your company will collapse, cannot survive. So that's what happened for the most of the companies. They are doing it this way, and wrong cost allocation can cause them to be out of the market. And who to blame now here? Who to blame in this case? So everything is done, the damage is already done.
organization, maybe the one that I can relate is project based. Like if the because like one of the things that they will want to look into is to allocate the cost of the manpower to the project, as in like what project are we embarking for next year. And example, we have project A, B, C, and then like the time consumed for like for me to actually contribute like certain on certain project lah. So maybe how can I like relate to that
You
like
mean the
scenarios?
cost for the
Yeah, like for example, we have one project. This project is called like maybe project A lah. Project A, and then we have the staff, right? Staff, it includes like the finance officer, the project manager, so they want to know like what is my cost in terms of like contributing to that project. Example, that project require like consultancy, maybe what else? Consultancy, and then meetings cost, which is like maybe we need to rent a venue, or so that total cost, and to divide it amongst this like the manpower cost, like how.
Is it only one project or you have many projects going on?
So this is like one of the example like how they wanted to like how I can relate to this cost allocation, like in terms of to report to the management, like like how do I, so example like this project costs this much because of this. The breakdown would be
this project cost, as if you remember yesterday we talked about budgeting, right? We show in the budgeting there is some cost is what you call it, the cost of goods sold, right? And some of these costs relate to the management and admin. Admin costs. Okay, now I have no problem with the direct costs. For example, consultation is a direct. Okay, only for that project. You have, like want to book a venue for the meeting, also related to that project. The problem is that you facing in such case is the admin cost. Okay, do I have to charge the admin costs and everything related to admin? I said admin, including rental, including insurance, including all these things. Now, do I have to charge all these costs to that project? No, the answer is no. These costs have to be allocated to the whole projects. Okay, you have 2 projects, so these costs have to be equally, and not equally actually. Depends and utilize for this project from all these total. Okay, maybe I have 1 project, but overall I don't have too many people in my office handling this project. All projects going to project A. Project B don't have too many people handling that. Okay, so now I have to allocate this admin cost. Okay, to these 2 projects based on how much they utilize from my admin costs. Because if you allocate the cost equally to these projects, okay, actually it's not fair to B. Because B only consume only 20%. The total admin, everything's only 20%. And you charge it to him, okay? While that one is consumed 80%, you give him only 50. And for the management, project A more profitable than B. Of course it is. You know why? Because of the not fair allocation of the costs for these things. You have, for example, 2 supervisors, or even in consultation, like for example, consultation are using for both. Okay, now consultation is based on the hour, right? How much hour you consume for A and how much for B. Now you have to allocate this consultation hours based on the how many hours for each. So hour here is used as the driver, call it driver, to allocate these consultation costs. Okay. In meeting room, sometimes in the meeting room we have meeting for both. Okay, now this cost is including both. So how this is not one. This one needs a lot of accurate data. Okay, how much you are using for A and how much for B. You cannot equally, cannot. If you treat your projects or products equally, all your overhead will be wrongly allocated to these two. And wrongly allocated is everything after that will be wrong, everything. Okay, so the allocation costs or method you are using is the main cornerstone for your budget or decision. Okay, so in any projects we have, you don't look to them equally. Okay, because looking to this project equally, because there is no projects consume the same resources. Okay, there isn't. Okay, everyone needs to have some more resources here and less there. When you talk about resources can be in any form, can be material, can be human manpower, okay, can be other service. Okay, all these things, if you are equally allocated to your products or projects, you end up with the wrong estimation, wrong budgeting. Okay, wrong budgeting means wrong allocated your resources. At the end, one of these is not fair to one of these two. Your decision, your top management decision, will be based on your information on your budget, and that wrong information you give can shut down the right projects and continue the wrong project. And it's all about this cost. Okay, so the difference between these two, like for example, traceability. Okay, direct cost easy to trace, like what you see here. That one hard, very hard, because a lot of you need to find out the office hours used. Sometimes some costs are based on the machine hours, some costs based on the hours for setup. It's all about what cost driver you are using. Cost control is easier to monitor for direct material, but for overhead, or they call it indirect cost, often overlooked or misunderstood. Yes. Impact on pricing, they have clear base for markup. Okay, but overhead or indirect cost can cause mispricing if badly allocated, like in our case just now. So if it's badly allocated, so you're going to end up with the wrong pricing, mispricing. Okay, so mispricing means it's the end of the story. Okay, there's nothing to do after that. Okay, and everything's decision after that will all be upside down. Okay, then we have another type of cost, we call it direct, or what do you call it? No, same, right? Yeah. Example here, the company products electrical accessories, product A and B. They have two products here. Okay. So to produce one of product A, it requires raw material of $10 and labor costs, which is $10 for 5 pieces. If you pay $10, you get 5 pieces. But this one material is $10 per piece. This one $10 for 5 means per unit is only 2, right?
Oh yeah.
$2. Specific power is used on the conveyors built to the facilitate movement. For each 10 pieces, it's required 100 grams with the cost of $10. Okay, for means 10 pieces. That means every piece will cost $1. And the share of depreciation for electricity maintenance of each product of cost A will cost $1. So using this information, you need to calculate the direct product costs, indirect product costs. So direct product cost is these two, which is 10 plus 2, 12, right? For indirect one, which is here used for $1 here, and then you have another is maintenance, electricity, and all would be $1 per piece, means $2. So indirect cost is $2, and direct cost is 12. These all together would be 14. So this is what they call it total product cost. Okay. Then beside the product cost, okay, these two, this one plus this one, we call them all products. Okay. Then we have another one we call period costs. When we talk about period costs, we talk about admin costs. So this all together. So now they classify this one direct and indirect only to in for the purpose of traceability. Okay, so how to trace this cost, we have to classify to direct and indirect. Okay. Now for other purposes, for like for example, if you want to calculate the what they call it the total costs, it has to be products, these two plus period. Okay, so we have another classification. Okay, then this is what we call it product and period. The product one, the one we mentioned just now, which is direct and indirect. So the period cost here, which is the cost, okay, expense in the period, which is they are incurred, like for example, selling, admin, and expenses important. It's appear on the income statements. So these are now this one cost for the income statements. Income statement you have two costs. One you call product, which is cost of goods sold, plus period cost, which is the admin and what they call it, admin and other expenses. So we input it in but these two costs is an accounting period. Okay. And that cost, the first one is for the traceability. So now we have two different costs for two different purposes. Okay. One for traceability, it's become direct and indirect. Okay. And for accounting period, to prepare our financial statements, it has to be product costs and period costs. Okay, you see, different costs used for different purposes. Okay, so for example, how this period and product influence or implicate in the implication in the budget. Okay, correct classification of this period and product cost affects the profit projection, right? Because now I prepare my income statement to see, is this project make any profit or not? So this your calculation is based on these two costs. Okay, if you over underestimate any of these two, period or project or product cost, this will affect the profit you are forecasting. You want to make, we expected our profit for the first year of this project will be this much. Okay, but it's not that much. Why? Because you have wrong in these two projection here. Okay, overestimate any of these two. Okay, and means our budget will be affected. Okay, we need to know that because these two is the one who directly relate to the profit projection. Okay, and profit, when we talk about profit projection, we also talk about cash flow, right? So your cash flow also will be wrong because you project something different. Okay, where's the cash flows come from? It's come from here. Okay, this profit is involved when you calculate your cash flow. It also helps to allocate costs by month or quarterly properly. Okay, to allocate the cost. Now I know. Okay, I already calculate my costs. Now I want to prepare the payment for these costs. Okay, the payment you want to pay, for example, 20% the first 2 months, 30% in another 3 months. So how to make a payment? Okay, based on your estimation for this cost, means wrong estimation for this cost will be have wrong allocation for the cost throughout the period of the budget. Okay. Misclassification lead to the timing errors in the expense planning. Okay, that's what you said. Timing period, the payment of your expenses have to be allocated throughout the period of 1 year. So when to pay at what time. So any wrong, allocation for this cost will lead to this expense wrong or error in expense planning. Or we're supposed to pay only 20,000 this one, but the reality you need to pay 40,000. Okay, so wrong estimation or error in the expense planning. Okay, wrong planning for your payment for your expenses or costs. Okay, then we have this opportunity cost, which is by decision making. Now, okay, let's say that in our budget, okay, if you remember yesterday, okay, we talk about, like for example, in my budgeting, we find out that sometimes you have surplus, right, in your cash. Sometimes you have deficit in your cash. Okay. Or when we talk about at the beginning, we talk about what do you call it, capital budgeting. Okay, capital budgeting. I want to invest in the project A. Why? Because this project A will give me return, this much return, 10%. Okay. Now, for your budget purposes here, this opportunity cost is very important. First, okay, I need to know the opportunity cost means what if I don't invest in these projects? So it means if I invest, if I have 100 million for, now I allocate 100 million for project A, okay, and everything is in the right place. Now I need to know the opportunity cost. What opportunity cost means? Opportunity cost means if, assume that this project is not there, what I'm going to do with this 100 million. Okay, this 100 million, if you put it in the bank, invest somewhere else, how much does it give me? Which means that this new project must give me something equal to the opportunity cost. Okay, if the opportunity cost is 10% and this project only give me 8%, do you have to go for this project? From the first place, no. Why?
Yeah.
Because I get much better offer somewhere else.
Yeah.
So why I have to go? So to have to decide about your investment in your budget, not only this one for investment, even in your budgeting.
Yeah.
Okay. So I spend this much, for example, for this cost. What's the opportunity cost? Like what we see just now, which vendor,
Yeah.
That's one also opportunity cost. Vendor A and B.
Yeah.
So which one is the right option? Okay. What if I don't take this supplier, I take supplier B? So how much is it going to cost me? So for decision making here, it's very important to know what is the opportunity cost. If you don't know, you will accept any figure there because you don't have any other option or you don't have any other idea about the second option. So we need to say here, we need to know for everything we decide, in our budget, there is opportunity cost for every option we have, okay, which is the alternative. So then we have what they call it sunk costs, so the costs that have already been incurred and cannot be recovered. Sometimes the cost we already spent is already there. Okay. For example, here they said the example of this sunk cost, we call it research and development costs. Some also they said fixed costs. Fixed costs you're going to pay whether your factory or your project is on or not on. So this is what we call it sunk costs. So the cost that is already there and ignoring and rational decision making. Ignored, usually they ignore it, when they have decision making. Because it's there, you can't avoid, you cannot do anything about it. Okay, then we have this classification rule in terms of what they call it manufacturing versus non-manufacturing costs. Okay, so manufacturing here is, for example, we have direct labor, direct material, and manufacturing overhead. The one I mentioned just now, direct and indirect costs. Okay, these all they call them product costs. Okay. This product cost is also they call it manufacturing costs. It's all about, so are tied up to the product's creation. Okay, while the non-manufacturing costs, okay, is the things that does not have nothing to do, like a period cost. Okay, have nothing to do with our manufacturing. Okay, so it's important to separate these two in our budget. Okay, for the accurate cost tracking. Okay. Product costs go into inventory. Product means what? Product cost means these two. Okay, it's go to our all these three go to our inventory, and the period costs go to our operational budget. So we have operational budget and we have our inventory costs. So our inventory costs related to these three indirect costs, which is related, or the non-manufacturing cost is related to our operating budget. So understanding this helps allocate resources properly across departments. So if you don't know which one manufacturing cost, which one is a non-manufacturing cost, you will have problem to allocate these resources properly among your departments or among the parties involved in your projects or products. Let's say here that's okay, direct material, so we call manufacturing cost direct material, direct labor and manufacturing overhead. You know, manufacturing overhead, this is what we call it just now indirect costs. You see, now we call it, these two are direct, this one we call it indirect. But now when you talk about manufacturing cost, it's a different classification. Okay, these three all now they call them non-manufacturing costs, all of them three. But just now when you said direct and indirect, this one direct, this one indirect. Now we put all together, they call them manufacturing cost, which is a product cost. It's a product cost. Okay, so this one important, vital for the calculating of the cost of goods manufacturing, cost of goods sold. This one also same for cost of goods sold, but manufacturing will allocate to the products for the accurate costing. This is about how accurate is your costing. It's based on how good you are in allocating this cost. Okay. For example, the factory rent, utilities, all these one are indirect or liquid manufacturing cost. Okay, then manufacturing costs. Okay, for example, like selling expense or admin expense. We call it period cost just now. We call it period cost. Okay, related to the selling of the products, this one related to the admin costs, sales, commission, advertisement, office supplies. So deducted as expense in the period, they are incurring. Deducted as expense in the period, they are also incurring. These are the same, which is the period. We call it also the other name is the period cost. Okay, here we are. For example, how this impact manufacturing and manufacturing or budgeting. So it helps to assign to the correct departments or projects. So we have to know this because we want to assign which one, because we have different products, means we have different kind of material used for each and labor used for each. So it improves the accuracy of the cost of goods sold and the gross margin forecasting. Just now, when I thought about when we talk about the cost of what they call it, not direct and indirect. When we talk about this product and period cost, we said it's have impact in our profit projection. This in fact impacting our profit projection. But when you talk about manufacturing and non-manufacturing costs, this have nothing to do with our projection of the cost, but it's about our gross margin. You see in our income statements, we have sales minus cost of goods sold, right? Okay. Then we have what they call it, gross margin or gross profit they call it. Okay. You remember that in the balance sheet, gross profit. The cost that the first cost we have, okay, it's have nothing, it's only about period and products. Only I know how much profit I make from this project.
Yeah.
Now this one is more details. I want to know the gross margin. Okay, because you know sometimes, okay, you have in your balance sheet, okay, in our balance sheet, you have in your balance sheet, for example, you have no balance sheet, income statement, you have sales, for example, 10 million. Okay, you have cost of goods sold, for example, let's say 4 million. Other expense, we have here, for example, 3 million. So our net profit would be 10 minus 6 will be 3 million, is it? 3 million. But your gross profit here, how much? 6 million. This one I call it gross profit. Gross profit or gross margin. Okay, 6 million. Okay. Now, we are the controller in the budget. okay, as a control of the budget. I know that my cost of goods sold is 4, okay, and I know my other expenses is 3. Now I want to know, okay, okay, 3 million. 3 million means out of this 10 million, 7 million is go for cost, right, and expense. Okay, in general, means the 7 million is going to cover my expense and my costs. Okay. Now for you, these figures, which is you get from what you call it period costs. Okay, period cost does not tell you too much about your cost of goods sold, right? Now I want to know my cost of goods sold. You have to go back to this manufacturing and non-manufacturing cost. Okay, what is the manufacturing? Direct material, direct labor. You go here is this one has cost me 4. And means 3 million is for what you call it, for management, for marketing, for all these things. But is it rational? Is it rational that I make 10 million, 4 millions go to costs? Only it's gone for our costs. Okay, so now where I can play as a controller or the management, where they can play and check where is there's any possibility to reduct, is it these costs or these other expenses? You know, this is, for example, you have throughout, you know, your many years you will find out. But sometimes you will find out this one 10 million, okay, this one I have it, for example, for the last few years for around 4, right? Around 4 this one. But this time it's become 6 million. Okay, this one remain almost same. Okay, means your profit there is now only 1 million, right? 10 minus 6 minus 3, you have only 1 million. Okay. Means there is something wrong here. So here we are, need to go and check it. Because you know, they said what they said about the history repeat itself means your budget for this year should not be too much different from the last few years. Okay, even if you have zero-based budgeting, you should not be too much different. But sometimes it gives you a hint. If you look at this manufacturing cost, this is straight away, there's a big question here. Okay, there's something wrong somewhere in this one. Okay. This we are not talking about cost deduction. We are talking about cost control. Okay, control means something is not as usual. Okay, but the cost reduction, you go beyond that. I want to reduce my costs. Okay, now before that we have there's something wrong here. It needs to be done, and you know your items. If you are aware of your, if you very well reading aware of your budget, your figures, you can identify very easily what's wrong and where. Okay, what's wrong and where by looking only to the figure. That's going to give you already very clear hint about what's the problem. Okay, so but if you are not aware of these things, okay, you don't know where to identify that. Okay, 6 million, 4 million, just carry on. Okay, but where does this come from and how? And you look at the margin here. Our margin is dropped down. Okay, our margin will be higher, more margin or less margin is based. Now our margin is here. Our margin here is 60%, right? 6 million means you make 60%. But for this, in this case, your margin will only be 40%. Okay, so you come out with the good or bad, wrong or right margin is based on your estimation for these two manufacturing costs. Okay. And also it have aids in the segmenting operational versus production costs center. Okay, you know what's the production cost, what's the operation cost. When we talk about operation costs, we are talking about this. These are the for our operation, and this is for our production costs. Okay. So knowing these costs is very important to identify our costing. Okay, I think we need to pause here for a while. Okay. Then we will continue in after break.
Okay.